The euro was largely range-bound yesterday. In early trade, the European currency gained ground supported by upbeat economic sentiment data from Germany and the euro area. The German ZEW Economic Sentiment Index, tracking the expectations of financial market experts, climbed to 13.1 points in October from 3.6 points in September, surpassing analysts' projections of 10 points. Eurozone economic sentiment increased from 9.3 in September to 20.1 in October, compared to analysts' forecast of 16.9. Eurozone industrial production data was in line with consensus estimates, while inflation in the bloc's member states such as Italy and Spain eased, reinforcing expectation that the European Central Bank would cut interest rates again at its next meeting. US statistics were ignored by the market, while speeches by Fed officials fueled demand for the dollar. A similar situation occurred the day before after Mary Daly and Adriana Kugler spoke. Amid expectation that the federal system would not be as active in cutting rates as previously expected, the greenback strengthened, thus putting pressure on the euro. The risky currencies is not in high demand ahead of the ECB meeting and is likely to remain under pressure. Speaking of the British pound, it gained early Tuesday on the back of mixed UK labour market data. Britain's unemployment rate fell while the number of people claiming unemployment benefits rose and average earnings fell. Bulls failed to break above the resistance level of 1.3099, with sterling pulled back to 1.3060. The British currency is currently trading sideways and is likely to remain range-bound as today's macroeconomic calendar is bereft of any major news releases from the UK, except for inflation data. So let's see what reports are worth paying attention to today. As mentioned above, Britain will release data on consumer prices, which are estimated to have increased by 0.1% in September after gaining 0.3% in August. Annual inflation is expected to come in at 1.9%, down from 2.2% in August. This would allow the Bank of England to continue easing monetary policy. Thus, a more pronounced slowdown in consumer price growth is expected to put pressure on the local currency. Traders may also take notice of UK input and output producer prices. Although these reports are of secondary importance, a slowdown in price growth could prompt the British regulator to be more aggressive in cutting interest rates. This, in turn, would add to pressure on sterling. ECB President Christine Lagarde is also scheduled to speak today, so let's see what she has to say ahead of tomorrow's meeting. As for US statistics, there are no important reports scheduled for today, except for export and import prices. Therefore, there is little chance for risky assets to break out of the sideways range. Now let's move on to the technical analysis. The 1-hour EUR USD chart shows that the 1.0884 level acts as support. A decline followed by a false breakout at this mark will generate a buy signal, with the euro recovering to 1.0918. Its false breakout will make it possible to go short. If the price breaks through and fixes below 1.0884, the euro will likely extend losses to 1.0855 and 1.0830. At this level, I recommend going long on a rebound to catch an intraday correction of 25-30 bips. Long positions at 1.0855 and 0.884 can only be considered on the false breakout. If selling is muted at 1.0918, the euro-dollar pair is likely to remain stuck in a wider sideways range ahead of tomorrow's ECB meeting. If the price breaks through and consolidates above 1.0918, a strong buy signal will be generated, with the European currency climbing to 1.0952 and 0.979. At this mark, it would be wise to go short on the rebound, expecting a 25-30p move. Going short at 1.0952 and 0.918 will only be relevant after false breakout. Speaking of the pound-dollar pair, a false breakout at 1.3099 will generate a sell signal, dragging sterling down to 1.3061. If the price breaks through and fixes below this level, the British currency is likely to dive to 1.3023, where bulls are expected to regain control of the market. A false breakout at this level will make it possible to go long. In case of a deeper move after the release of UK statistics, long positions can be considered at 1.2975 on a false breakout or at 1.2941 on a rebound, counting on an intraday correction of 30-35 pips. In a bull case scenario, a false breakout at 1.3061 after UK inflation data will allow the British pound to rise to 1.3099. If the price breaks through and consolidates above this mark, it will pave the way for further gains to 1.3131 and 3171. At this level, traders are advised to go short on the rebound, expecting a 35-40 pip decline. Going short at 1.3131 and 1.3099 will only be relevant after a false breakout. Good luck with your trades.